Muted.
And hi there, I'm Mark Sebastian, founder of OptionPit.com, and this is the AM Volatility Report reminder. This is for business purposes, educational purposes only. Business purposes for me, educational purposes for you. None of this should be considered investment advice. Options have risk. Consult your financial professional. Hey, we post this stuff on our blog. We did our trade idea of the week, Goldman, last week. You can sign up for the weekly wheel, which is our new service. I'll have a new wheel idea out today, and you can go from there. Let's talk the market. Well, markets are down. It was a really rough open, but we have since recovered. We're now only down about 13. VIX was 14.5. It's now back below 14. As the buy the dip mentality, the buy the pre-market, sell the pre-market, buy the market, seems to have worked so far. That was a nice little recovery. And I think this is less related to the actual healthcare bill and more related to tax reform, which I think is harder and easier to do at the same time. Doing it really, really well is going to be hard. Doing it poorly is going to be relatively easy. So it's just about whether they can get their act together and get it done, get it straight. And I think that's what the markets are worried about. I think they saw that there is a section of a party that just can't take yes for an answer, and so rather than going righter, this will end up being more centery, which is just a different take on tax reform. You've got a nice little lift in VIX, but nothing crazy. But it's nice to see some volatility back in the market. I mean, take a look at the SPX. I mean, it'll take a second. I mean, take a look at this chart. Take a look at a daily chart here. I want to take a look at what realized volatility has been like. There's 20 and 10 and implied. I mean, we had seen prior to kind of early March, realized volatility get, on 20 days, 4.5%, on 10 days into the threes. All right. It's now climbed its way back toward, 8, 9, 10 digits. A little bit of volatility in the market. Nothing crazy. Tends to be pretty good. And, it can make for some good trading, and implied volatility is finally starting to move. We're at the high level for the year. And again, necessary. We haven't had any real slowdown since the beginning of the year. And if you look at where we are in the cycle of SPX, it's not like we're that far off the highs. I mean, the highs are all about 2,400. All right, and the high close is 23.95. We're $70 off of that. That's less than 4%, 3.5%. Right? We've now dipped below the 50-day moving average, right there. But that has been a pretty strong spot for the market to find footing in the past. And we haven't even touched. It's 23.30. We haven't even touched the 50-day moving average since November 9th. All right. We haven't touched the 200 since November 4th. All right. And the 200 would be about 2,200. So that would be like apparently the worst case scenario level. I mean, if you look, the Hillary Clinton, Brexit. So, there could be, over the next couple of days, there could be as much as another 4% down. if this is an actual shakeout. If it's not, then this is a pretty good spot to turn around. Down, that hitting that 50-day moving average. So it's just going to be interesting to see how things move around. All right, looking at the rest of the markets, you can see Apple's down a touch, Facebook's down a touch, Goldman getting murdered. All the financials are getting pounded. At some point, those are going to be areas to buy. There will be a chance. Maybe today, maybe the next couple of days, but financials have been getting just absolutely wrecked by the market, and that's what's been leading us lower. I mean, take a look at the ETFs, and building materials down, energy down a touch, but really technology and the financial XLF down 1.5%. I mean, that's just a brutal. There may be a wheel trade in the future for that guy coming. That's where everything is landing. All right, oil. Down again. Gold probably up would be my bet, but I'm not sure why. And then, of course, your bonds are rallying. I'm not sure how much higher bond prices can get before someone steps in and turns these things around. So, end of the day, it looks like we're going to get bought, but who knows? This market's been pretty skittish. I think the financials are definitely in buy the dip mode. That's why I'm going to be concentrating on my wheel trade today. All right, folks, if you have questions, you can email me, mark@optionpit.com, or call me 888-TRADE-01. Have a great day.